The resistance for our markets will be closer to 23,870, which is the 200-day moving average.
First rates for 2025 are absolutely in the green. It's only 0.1%, but nevertheless important.
But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform?
There is no overdoing anyone, I would say, because you really never know what fancy the market takes.
I think what we're trying to do is shift towards companies where earnings are a little bit more visible.
Above all, I think we have demonstrated the resilience in our asset quality.
Nishant Pitti, one of the co-promoters of the company, has resigned as the CEO.
Where our credit score could potentially change multiple times during the month versus once a month earlier.
First trading day of the new year, and there is a pickup in the markets now. The Nifty is up close to about 0.5%. A disappointing set of numbers. Total sales are down 1.1% on a year-on-year basis.
Started off 2025 on a strong note, on a green note, especially with the broad end of the market.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Closing Bell, coming to you from the CNBC TV18 Motilal Oswal studio, and joining me is my co-anchor, Reema Tendulkar. Well, we have a market that's sprung up admirably. So Indian markets up almost 1% now as we trade in grand isolation. It's not just because we don't have negative global cues, at least for the next 24 hours. I think the important point is that the one domestic cue that we have, auto sales, is actually mildly positive. I mean, I leave you to give me your opinion, Reema, but the fact that small car sales have picked up and are showing a good number should be taken as positive, isn't it?
Indeed. I think that is the biggest positive, because you look at Maruti's numbers, and Maruti is now the top Nifty gainer. The overall sales growth is 29.6%, and in that, it's the small car, which is your mini and compact. That has grown close to about 30% on a year-on-year basis. On a month-on-month basis, it's still lower, right? But on a year-on-year basis, it's 30%. And this was the segment which was impacted the most. We know sales were weak. That said, April to December, sales for the small car segment is still down about 10%. But in the month of December, there has been a recovery.
How much is it down, April to December?
10%, approximately, is down 10%. But December to December, I mean, just, you know, December month on a year-on-year basis is up 29%. SUVs continue to remain strong, whether it's for M&M or even for Maruti. Both of them, you know, have a nice 18-20% kind of SUV growth. For tractors, M&M is the bigger player, and M&M is showing you good growth in tractors. So I think the auto sales on margins, I think, are fine.
Okay, but I take your point. Actually,
two-wheelers is a problem, at least Bajaj's.
Yeah, I take your point entirely about two-wheelers. We will have to still see, of course, Hero, but throughout the year, actually, Bajaj has been outdoing Hero. As well, we must remember that in Bajaj also, the electric vehicles are doing better. So it's quite possible that people are just, biding their time to choose the state-of-the-art vehicle over the conventional vehicle. So there could be other reasons, but, you know, the fact that cars are doing well and not two-wheelers just drives home the K-shaped recovery. And I want to take the point about how your December sales are better, even if April to December sales are still lower, to what we spoke about earlier in the morning about taxes, about capex. You know, the year-to-date, April to November capex by the government is still minus 13% year-on-year, or 12.5%. But if you only look November over November, the November capex is about 20% higher than the November of 2023. So incrementally, things could be improving. At least the early lead indicators we have for the third quarter seems to be having a fair share of positives. We still await a lot of data, but my sense is that we have something to cheer about on the first trading day.
Okay, let's talk about some of the winners and losers of today's trading session. So right on top, you've got Maruti and M&M. Both the stocks are up 3% and 2% respectively. Innocent Bank, which was the biggest Nifty drag last year with a 40% downtake, is rebounding. Innocent Bank is up 1.5%. L&T is the big boy, which is showing you strength. Asian Paints, HDFC Bank, Aisha Motors, Apollo Hospitals. These are some of the movers on the way up. On the way down, you've got Dr. Reddy's under pressure, Hindalco, Adani Ports, Bajaj Auto, Tata Steel, a little subdued in trade. But Mitesh is with us now to tell us how you should position yourself in the last hour of trade. Mitesh.
We've kind of bounced back from the levels which we had discussed in the morning, and I think we're just, back trying to get to the upper end of the range. For the bank Nifty, it will be around 51,500, 600. There might be another 300-400 points left. On the Nifty, 23,850, 900 is the zone. So, we already had a high of 23,825. But yeah, I think around those levels. So if people have bought around the support levels, some profit should be booked and stop losses should be put tight. And then the trading should shift to, some kind of a stock-specific ideas. I have a buy on about India with a stop at 29,650 and a target of around 30,600 to begin with. Then we may eventually look at, slightly higher levels and a buy on Apollo Hospitals with a stop below levels of 7330 and a target of around 7550.
Okay. Well, I've been watching the Paytm stock, Mitesh. Actually, we should pull up a 1 year of the Paytm stock, or rather the 2024 chart. It's actually been a full string of higher highs and higher lows for that stock. It's giving you a dip today of about 2.5%. Is there a trade there, Mitesh?
Well, I think there are first signs that Paytm might be making a temporary high or top around the levels of 1,025, 1,050. And my sense is that I think, if people have it, now is the time to take profits. I believe a pullback to about levels of 940 to about 925 could happen. And then we'll see from there if the stock shows trend to recover. But for the timing, the immediate view, and you're right, I think, the stock has done extremely well in the last 1 year, starting from levels of 350 odd to tripling to about levels of 1,050. I think now is showing first signs of tiredness on the indicators, and my sense is that some consolidation is required here.
Okay. All right. Mitesh, we'll of course come back to you for the BTST trades and for other advice. For the moment, let's cast our eye on the year that was. The Indian market ended 2024 with positive returns, despite, of course, a roller coaster ride. But the big question, of course, on the first day of 2025 is, what does this year have in store for us? Nimesh has done a very wide-ranging poll, and he's here with more details. Nimesh.
2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record in many ways. The highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the sector is facing and the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned. And after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's a big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned. The other important factor was the rupee. We had a record year as far as rupee is concerned. So we asked the question as to will that be a spoil sport into 25 as well. Most of the experts believe that the rupee is going to be range between 85 to 87 a dollar, while a small segment expects the currency to appreciate below 85 as well going into 2025. Also, we saw a new RBI governor taking charge, and that the first policy will be in 2025. So we asked the experts what to expect in terms of RBI action. It's a divided house there. 50% believe that the first rate cut from RBI will be in the Q4 of this financial year. However, a small portion believes that the stretch line could be as late as the third quarter of FY26. So that's the RBI action. Indeed, if the RBI has to cut rates, then how much is the rate cut that the street is penciling in? Half of the respondents, which is 50%, believe that the rate cut going into 25 would be at least 50 basis points. So 50 to 75 basis points is what a lot of people are betting on. So that's the rate cut expectation going into 25. In fact, 24 was a very volatile year. We had a budget, we had general elections, multiple state elections, and so on and so on. But 25 could be a year of moderate returns, but the expectation is that the positive returns would continue going into 25 as well. That's the big poll from CNBC TV18.
Okay, thanks a lot for that, Nimesh. And with that, let's invite our good old friend and advisor, market expert Prakash Diwan to join us. Prakash, thank you very much indeed for joining us on the first day of a trading day of the trading year. And here's wishing you a very happy 2025.
Thank you so much, Lata. Thank you, and a great 2025 to you, Prima, the team that puts our shows together, and of course, our audience. So thank you and all the best.
Well, thanks a lot for that. And in fact, the team that puts together the show is someone you don't see often, of course, except when you visit the office. And they do a lot of work, much more than we are doing. But, the question on the platter for you is, what did you make of the auto sales? I mean, after a long time, we've seen Maruti's small car sales do well. So are you on the verge of something big and positive?
So hopefully, I think these numbers have been very interesting and a little bit of a surprise element there. Because remember, December is not the best of times for auto sales to perk up. Usually, people wait for the new year to buy into cars with a fresh year of registration, which kind of helps them in at least a perception on resale value is better. The indication that the A and B class or the micro and compact segments doing well means that there's recovery afoot, probably in the rural and suburban markets. The SUVs of the world, the electric vehicles, all of that is a very urban phenomenon. And all of us know that there's been not much of a disappointment there, Lata. But if these sales pick up, it probably is the start of, hopefully it's a start of a trend which could deepen. And, remember one thing, a lot of the competition that used to be in that space, which was from the Tatas when they came in with their new PV platform, or for that matter, the Hyundai, smaller cars or the Kia, they've all shifted up in terms of the value chain. Nobody wants to be in that space. Maruti is probably by default enjoying the market share. But interestingly, I love the fact that M&M has finally clocked better sales on the tractor segment. And that has been a big disappointment all this year. Throughout 2024, if you see numbers haven't been very positive. But if that were to take off as anticipated, we could be looking at a very virtuous cycle of improvement for M&M on all counts. Tractor was one leg which was not doing well. EVs will start doing well because of the launches that they have. And of course, SUVs, they continue to be a fairly strong player. So that's where I think the numbers are very interesting. Let's see if this gets followed through in January.
Let's just quickly recap the auto sales numbers for our viewers. So Maruti is the big winner, and Maruti's share price is now up more than 3%. The total sales have come in at increased by 29.6% at 1.78 lakh units, and this is ahead of the CNBC TV18 poll of 1.63 lakh units. But the surprise was the mini and compact segment, which is a small car segment that has seen a growth of 29%, while SUV growth is still intact at 21%. Bajaj Auto, on the other hand, is a disappointing set of numbers. Total sales down 1.1% in December, lower than expectations. Month on month, we're not comparing for most of the companies because November had the festive period boost. But for Bajaj Auto, two things stand out. One, on the export side, things are improving. The export, volume growth was about 70% in December. And secondly, export contribution is now 50% of the total sale. Also, on the electric two-wheeler side, the company is in pole position with a market share of 25% in the month of December, as per the Vahan data. So it's ahead of TVS Motors and Ola Electric. For M&M, it's a good, it's inline numbers. Both their auto segment, which is predominantly UVs, your SUVs, that is doing well, and even tractors is doing pretty well. So the company's tractor sales have gone up by 20% in the month of December, and this stands out because its peer Escort had reported a decline of about 10%. So when you do the comparison for M&M, the tractor sales are very strong. For Hyundai also, it's an okay quarter, in line with estimates at 55,000 units. Total sales are down 2.4%, but again over here, domestic has fared better than export. So in a nutshell, most of the passenger vehicle numbers are fairly, good, whether it's Maruti, whether it's M&M, or even for Hyundai, it's flattish on a year-on-year basis. So domestic numbers are fine on the car side, but domestic two-wheelers for Bajaj Auto is still a spot of bother. So, Prakash, you spoke about, Maruti, etc. But what about Bajaj Auto, Hyundai? Hyundai is still struggling in terms of a share price.
So, yes, Nima. Hyundai is definitely not in the best of spots, first and foremost, when it comes to the stock price. It's been offered with fully this thing anticipation of growth to be priced in a little bit of exuberant levels, but and the size of the float was so massive that whoever wanted to have exposure to Hyundai has already got that in the portfolio. So would you incrementally move ahead on that? You need some big trigger to actually justify that. And I don't see any reason why that would happen soon unless there's some change in its product mix or new launches or some sort of a market share improvement. So we'll have to wait for that. And it will probably, organically claw back into some sort of a value zone, which is at least 6 to 12 months away, if you really ask me. And I was not very positive on the IPO precisely for this reason. On the Mahindra side, on the Bajaj Auto side, it's very clear. Bajaj is now a 50-50 game on exports and domestic sales. While optically the Chetak sales have been very robust from the base effect standpoint, they still need to kind of be able to continue with that leadership, and they have the wherewithal to do it. The product, as I had mentioned once on a show, it's far more superior than any of the electric two-wheelers that have come into the market. So it does have the right to win in that space. But you'll have to give it some time to do something dramatically, superiorly different. Especially the CNG motorbike is, my sense, is the key trigger which can change things for them. Otherwise, at this level, it's well priced. Most of the positives are in. There's nothing much that you would kind of expect. But if the CNG motorbike starts taking off in terms of volumes, then you have a very different market.
Okay, point taken. Speaking about the performance of automobiles and the small car probable recovery and tractors, Prakash, is there anything in the auto ancillary space that comes to the mind?
Oh yes. So there's a little bit of this fear that some of the Chinese companies, if they are allowed to set foot in the European market, and some of them have done that, especially on the EV side, it could make life difficult for Indian ancillary manufacturers, because a lot of the export that is directed to, and the same thing could happen to the US. So to be very honest, everybody's waiting with bated breath that US doesn't let Chinese companies get into the US market and start competing aggressively out there, because if that were to happen, Indian ancillary companies really have to step off that value chain. But as of now, if things don't change, unfavorably, you probably have the likes of Suprajit, Lumax, very, very strong franchise that they've built in terms of product superiority. And some of the other companies that have been very big in the beginning, in the sense when we started exporting to the world, they are the ones who will probably lose market share to more nimble-footed, agile players. You'll be surprised. Last 5 years, the best performances come from pre-call within ancillaries. It's done a multiple of some, I think, about 9 times or 10 times in 5 years now. That is because, in spite of the fact that pre-call was supposed to be a dying business, and you said analog meters is not something which is going to be the future and all that, but things change dramatically, on the ground. I would be a bit selective, but as I said again, allocations would have to wait till the US policy framework is out. But you could look at some of these smaller companies like Lumax and Suprajit.
Okay, that's amazing. I never thought that for auto ancillaries we have to really wait for the US policy on tariffs. Very interesting, a very important angle, Prakash. Rima, with your permission, I wanted to ask Prakash about power sector as well. Today, among the big order wins that we are announcing, a lion's share is coming from the power sector. We saw a big order coming in for SJVN, and there was also another T&D order that came in. Was it for Kalpataru?
KEC.
So, yeah, I know even Kalpataru projects got a big order. Yeah, KEC as well. So, I mean, in that space, what do you like?
So, no, that's a very interesting space. And again, I'll, add a little bit of the US angle to this, Lata. You have a massive surge in demand for power thanks to, the move towards data centers globally. By the way, this is the first time, places like UK and Germany are actually talking about power outages. We've never heard of that in Europe. But things have changed so much in terms of their energy mix, from nuclear to gas to solar to back to nuclear now. So there's this whole cycle that's happening thanks to the triggers from the Ukraine-Russia conflict. Now, what's happening is that power storage is going to become a very key area. So while you have a lot of renewable energy globally getting generated, whether it's from wind in the US, solar in France and in India and all, there'll be a lot of storage challenges that will have to be met. So we are working on identifying companies which are absolutely successful out there, which is called BESS, Battery Energy Storage Solutions. And there will be a lot of players that will emerge. The transformer part is the other thing. So, power has two things. One is generation, the other is consumption. My sense is there's a lot that's happened in investment on the generation side, but nothing much on the, not adequately enough on the consumption side. And that includes transmission and distribution. So we are quite positive there. But as of now, we haven't been able to identify any companies or businesses which look that promising from a valuation perspective. So if valuations permit, you'll probably start seeing some value there. But do allocate money to the likes of Tata Power or Torrent Power because they're fairly well placed in that value chain. So I'm very positive on this space, but newer names, under-discovered names is what I like, and yet to kind of zero in on some of these.
Okay, we'll await when you have zeroed in on Prakash. And yeah, good old power generators and distributors also, you advise that people keep their eye peeled on them. Thank you very much, as always, for joining us and giving us the benefit of your advice.
By the way, hotel stocks are seeing some buying now. Pull up a Taj GVK. It's a small one, but it's a 15% up move on that. The other one is Lemon Tree Hotels, 3.5%. And the surge is coming just in the last 10-15 minutes. Chalet Hotels, let's get that up for you on your screen. That too is spiking up. And Indian Hotels, I'm not sure if that's too moved up in tandem with the rest. No, Indian Hotels is still flat. But the rest of the hotel-related stocks are quite active in trade. And there is another company related to travel tourism, and that's Le Travenues Tech, basically Ixigo, the company which owns the platform Ixigo, which you go to for making your bookings for air, bus, etc. And that too has seen a bit of an up.
No, this could be just traders going up and down, traveling up and down, so to speak. Because, like I said, the cat is away and the mice are at play. If anything, the data that people have been putting out, media have been putting out, this holiday season, holiday destinations like Dharamshala, even Goa, have not seen 100% occupancy. So anyway, I mean, everything depends on at what price you are buying and what time period you're buying. So there could be buy even at such junctures. Nevertheless, I just want to introduce a note of caution that when we are pointing out to you things that are moving up and down, do remember that today is a day of thin trade. We are trading in grand isolation, and it could be that people are only trading for the day. You can wind it up tomorrow because the big cues of the US market are not going to be available today. They're going to be available only after trading hours tomorrow. On that note, we're going to take a break and going to come back with another important fund manager, Dsha Irani of Helios Mutual Fund, will be joining us on the other side.
Welcome back. 23,750 on the Nifty. It's a good 100-point up move on day one. But the question is, as we get into 2025, what's the outlook? Now, Jefferies and Kotak Institutional Equities have announced their model portfolio changes. Nimesh is here with the details. Nimesh.
Well, 24 was a good year for a lot of the investors, but now going into 25, some influential, strategists have made some changes to the model portfolio. I'll start with Chris Wood first. He wrote a couple of days back in the Asia ex-Japan long-only portfolio. He's reintroduced HDFC Bank after a long time with a 4% weight, and he's done that by reducing the weight in four other companies, which is Macrotech Developers, L&T, ICICI Bank, and Axis Bank by 1% each. So that's a big first change that is made to the Asia ex-Japan portfolio. The other important change that is made is adding Siemens India to the Asia ex-Japan with a 4% weight there as well. So that's a change in the Asia Japan. In the India long only portfolio as well, he has added Siemens India with a 4% weight, and he's cut the weight on AU Small Finance Bank, and he's also introduced HDFC Bank with 1% weight in India long only portfolio by reducing the stake or by cutting the weight in Axis Bank. So that's the large changes which has been done by Chris Wood of Jefferies. Sanjeev Prasad of Kotak has written a note for next year, and he's also made some important changes to the model portfolio. He's reduced ICICI Bank by almost 90 basis points and allocated the same to IndusInd Bank. So given the fact that IndusInd Bank has underperformed so much, there is a bit of change within the financial in that particular name. In the consumer names, he's removed Britannia from that list, and also reduced the weight on United Spirits, and that's been added to the likes of Dabur and GCPL. Both these stocks were big underperformers of 24. Within the insurance names, he's removed SBI Life, which has been the best performing insurance name there, and he's allocated that same weight to the likes of HDFC Life and ICICI Pru Life. And finally, he's also increased the weight on Adani Ports. Remember, the stock is sharply corrected in the last few months, and he's added 50 basis points to Cipla as well. So these are the few changes that Sanjeev Prasad has made in his model portfolio. The big takeaway is a lot of the strategies are now adding the underperformers of last year could be as a potential winners for this year, and hence adding to their model portfolios.
Okay, Nimesh, that's most helpful for those who are building their own portfolios. But we now have a guest, of course, who builds portfolios for others. Dsha Irani, CEO of Helios Mutual Fund, joins us. Dsha, good afternoon, and thank you very much. Here's wishing you a very happy 2025 from all of us at CNBC TV18.
Thank you, Lata, and wish you and your team also all the best. And obviously the viewers a very happy new year.
Thanks. Okay, let me continue the conversation where Nimesh left off. Where would you tweak your portfolios? Of course, portfolios don't change when you tear the calendar and change it to the next year. But nevertheless, we've seen the early auto sales numbers. It looks like small cars have done well. After a fairly long gap, we're getting good news over there. Not just autos, but is there anything that you're on the verge of changing in terms of sectoral allocation? Any sector that looks well priced?
So Lata, actually, we're very proactive in managing the portfolio. We always keep looking out for ideas and keep tweaking our portfolios. That's one thing, right? So a change in a date, the change in a date in the year is not going to make a difference to us. We've always been developing a portfolio for the future. That's one thing that I want to clarify. Secondly, if you ask me for the year itself, 25 itself, I think 24, though it started on a really good note, I think the last quarter was the one which really did away most of the gains in the market. But if you look at the overall year, the calendar year, the large cap index, which is NSE 50, I think was up some 8-9% odd. I don't see that to be a problem. I think, in fact, going into this year, maybe 8-9% is the kind of return you may just see. A high single-digit kind of return from the Nifty 50. The problem, however, will be in the mid-cap and small-cap space. And unfortunately, the mid-cap also has been identified as a market cap. Come to think of it, I think the mid-cap universe today starts at something like $12 odd billion. And I remember when I started covering stocks way back in the 90s, there's hardly any stock at a 12 billion market cap. So today, now imagine mid-caps coming. So it's all in your mind right now that this is a mid-cap thing. Obviously, the mid-caps are compared to large caps in their own space that they're working in. So you got to be selective in that space too. However, as an index, I don't think that India is going to do the way it did. I think 24-25% kind of returns. And the same is the case going to be with the small cap space. But fortunately for small caps, there's a universe is way beyond the 250. Anything beyond the first 250 is small caps, though the index is just 250 stocks. So you got enough ideas out there. So I think this year is going to be a very selective year. It's going to be clearly a stock pickers market rather than a rising tide lifting all boats.
Dsha, Nimesh did this poll, a CNBC TV18 poll. I'm sure he called you too. And one of the themes that emerged is financials, right? It's not a surprise, but 39% of them would say that this is the top theme going into 2025. The thing is, the Nifty Bank has underperformed the Nifty in 4 out of the last 5 years. And even last year, same time when we were asking our guests which would be the top sector to bet, it was financials because of relative value. So once again, it's financials, but history is telling us that banks are going through a challenging period and stocks haven't performed relatively.
So Reema, here's the thing. I was doing my analysis for my portfolio to all of my research team to ask them what we missed and what we got right. So, the top 5 sectors that moved in the last year, calendar year, were probably pharma, real estate, IT, capital goods, and I think autos, right? These were the 5 sectors which really moved. Of these 5 sectors, we were bulk of the time underweight 4 of these. And still, we beat the index for I'm talking about my FlexiCap fund, my FlexiCap beat the benchmark for the year by around 11 odd %, right? That's the kind of alpha that we generated. What we did get right, though we didn't get the sectors right, was the picks within the sectors, right? So that is what matters, even in the financial services space. For the BFSI space. you can't paint all the banks in the same brush. I mean, you saw the RBI's report, right? Most of the banks had strengthened their asset basis. The quality has improved. Obviously, there's been a red flag from the RBI saying that maybe the NPAs will go up going forward in the private sector space. But the fact is that the banks that we've chosen, we've done this kind of a stress test with them that even in the worst of times, did their NPAs shoot up? Were their asset quality always a question? So you got to be careful when you pick a stock within a sector also. So I'm sure there'll be way big winners in the financial services space. And that's how we got to go around picking as such. I don't think PSUs banks today are going to be a fancy. Private sector will be, but again, as I said, that within private sector, avoid the ones which have disappointed in the past few quarters in terms of asset quality. And the names are obvious. I won't even take those names. You saw that with the declaration of September numbers, some of the banks collapsed 20-odd% because of the asset quality that they had, which was a questionable one. So you got to be careful here. It's, as again, I'll reiterate, it's going to be a stock picker's market, be it the sector or the market itself.
Okay. Now, I take your point. I mean, we just had SBI earlier in the morning speak to us, the SBI chairman, to inaugurate the new year. His own stock has jumped 23.5% in 2024. Bank Nifty didn't do much. It did 4%. But SBI did well. And in fact, the top 5 gainers, Karur Vaishya is up 32%, ICICI 28%, Federal Bank 28%, SBI 23.5%, like I told you, and Indian Bank 22.5%. So, you know, there have been standout performers even in an otherwise flat sector like financials. But Dinshaw, how do you look at the... see, earnings was the disappointment of 2024. Clearly, the second quarter was a shocking quarter of numbers. How do you see earnings growth both in the second half as well as in FY26?
So, Lata, our feel is, I mean, given that, again, the EOSs started way early in December, the end of season sales I'm talking about. So it's obvious that retail is under pressure, right? I mean, that's why this so early in the day, the end of season sales starting off. And once again, you also mentioned that you saw, I mean, you talked to a few people and they were saying that the destination points, which were supposed to be filled during the new year, were looking quite empty as such. And obviously, I mean, if you I don't know how many of you realize that the yesterday's celebration was quite tepid in terms of the new year that normally is celebrated. So our feel is that December also will be a very disappointing quarter. I don't think December is going to be very different from what September was. In fact, that's what my analysts also tell me. And looking at the advanced numbers, which have been brought out by a few corporates, it's not been that great in terms of consumption. Our feel is that probably March will be the quarter when things will trough out. And that also in the back of a hope that probably RBI, though it started now easing liquidity to an extent, and probably some rate cuts will creep in the Feb policy. Maybe the government in the first of Feb budget will do something for consumption. So the hope is that things will trough out in the month of March. And by the way, let's not forget that there were 48 like weddings in the December quarter. And despite that, it's not been a great quarter. I mean, that's what our feel is. So let's see how it goes. So our feel is that from March onwards, things will start looking brighter. And that also on the back of RBI's actions as such. And obviously a lot depends on the government and the budget this time around. They have to push CAPEX, no doubt about that. I think the bulk of the slowdown started with the government cutting back on CAPEX and hoping that the private sector will kick in. But looking at the real interest rates, I don't think the private sectors were interested in doing that at that point in time. And I'm sure the onus lies on the government this time around. So these are the kind of caveats that one has to look at.
There was an article, I think the Retailers Association of India said that the growth in the festive period, that's October till early December, was just 7%. And it missed their expectations by expectations of a 10% growth. So clearly consumption hasn't picked up, at least not till now.
Just to add a point, and maybe, Dinshaw will know this better. Goan hotels have complained of poor occupancy. I mean, it's just a media article. I don't know the truth about it. But occupancy in Macau has soared 90%. So it could be inflation is making the difference as well. Do you think so, Dinshaw? That things have probably become a little expensive in India.
True, very true, Lata. I know quite a few of my friends who've gone to Oman for celebrating the New Year rather than go to Goa as such. And they found it like, they say that they probably conserve 50% of their budget by going to Oman as such. cheaper flights, cheaper hotels, and stuff like that. So I'm sure that is what's worked out. I think the pockets now are feeling the pinch, given that at least the domestic tourism is, given the high rates of occupancy, I mean, rather the ERRs as such. So.
I know there are videos surfacing online which show that Goa beaches are empty during this peak period, but the Goa tourism minister has pointed out that the 4- and 5-star hotels are operating at nearly full capacity, showcasing Goa as a top destination in India and emerging markets. Well, Nigel's there. We'll wait for him to come back and tell us. But Dsha, thank you for joining in, and wish you, your family, and the entire team at Helios.
Just an addition out here. Sure. That's called the K-shaped recovery. The rich are spending more, and the guys who really run the economy are not are feeling the pinch right now. So, but thank you for having me on the show.
Thank you, and wish you all the very best. I look forward to more conversations. Get into a break. As always, on the other side, we'll get you a few BTST calls from our technical experts. I'll go to the washroom.
Can I? Welcome back to our special coverage Outlook 2025. We just spoke with Sunil Singhania. Now let's take the conversation forward on how markets may pan out in 2025 with Samir Arora, founder and fund manager at Helios Capital. Thank you so much, Samir, for being with us on the first trading day and giving us the benefit of your advice. Wish you a very happy new year yet again. And with that, we wrap up this special coverage on Outlook 2025 for two market masters. Thank you for watching. Okay. That is very efficient of you. Welcome back to Closing Bell. It's that time of the trading day, last half hour actually, when we look for buy today, sell tomorrow calls, or even sell today, buy tomorrow calls. And joining us now is our technical expert, Mitesh Thakkar. Mitesh, thanks again. And tell us, any BTST or is it STBT today?
No, I have buy calls, Dutta. Coromandel, I think, is something which has done extremely well. The stock is trading at the day's high. So BTST here with a stop at 1919 for targets of 1955, and a buy on Lemon Tree Hotels. I think hotels was something which had been pointed out on the show earlier. So Lemon Tree is a buy with a stop at 155 and a target of 170 can be looked at.
Okay. Mitesh, anything in the banking space at all? I mean, it's been yo-yoing like a rubber ball, but is it too volatile to trade?
In all honesty, I think, the bank Nifty looks slightly weaker than the Nifty if I was to do a strength analysis. Okay. And therefore, I would want to take a short trade. Now, the bank Nifty already fallen from 53,800 to about 50,800. So, and today we had some pullback. So, I think let this pullback play out and then we'll look at some shorting ideas in the banking and financial space. Okay. Though I think, I would suggest some kind of a negative outlook on HDFC, AMC with a disclaimer that I have put option positions over there. So I have negatively biased positions over there. I think as long as the stock is below 43, 15, 20, good chance that 100, 150 point kind of a decline from these levels can happen.
Fair point. Thanks a lot for that, Mitesh. We'll come back to you later on in the trading day if we have time. But for the moment, we are shifting from technical analysis to fundamental analysis. Joining us now is Mayuresh Joshi, Head of Equity Research at William O'Neill. Mayuresh, thank you very much for joining us. First of all, Happy New Year to everyone at William O'Neill.
Thank you so much, Lata. And we are wishing you, the entire team at TV18 and all your viewers, a very healthy, wealthy and a prosperous New Year as well.
Okay. Well, Mayuresh, we are just days away from the start of a fresh earnings season as well. I guess in a week we will get either Infosys or TCS, 9th, as always. The
TCS and Tata Elxsi to kickstart earnings.
Yeah, so just basically, how are you approaching the IT space at all? Are there going to be any better tidings from the IT companies in terms of, hires or in terms of orders?
So, Lata, I think two aspects. One, I think in terms of core earnings itself, the expectation as we went through Q2 numbers, a lot of mid-cap IT companies and select few large-cap IT companies have given a very positive outlook in terms of their revenue guidance in dollar or constant currency terms. Obviously, the rupee depreciation helps to a tad bit. But again, I think there is a steady expectation of earnings growth remaining stable with the premise that pricing should not be an issue for most clients in their existing contracts or new clients that are signing in. The other element in terms of maintenance of the EBIT margins should largely be stable enough for the next few quarters as well. And though traditionally Q3 is a weak and a seasonally weak quarter because of furloughs, what Q4 will bring out in terms of seasonality and in terms of discretionary spending patterns, as far as the North American and European markets are concerned, I think the management's commentaries will probably give to that. But our own sense is outside this, what Trump probably does and the expectations in terms of restrictions on H-1B, there was some element of a positive tweet coming through. Positive numbers coming in from Accenture in terms of the guidance revisions as well, makes us believe that the mid-cap IT space is where the momentum can very well continue. Earnings can remain stable, margins can remain stable, and the commentaries can remain very, very positive. So a few stocks like Emphasis, Persistent, Coforge is something that we continue holding on to our global portfolios.
Got that. Mayuresh, actually top of the mind today is autos because the early numbers have come. But before we come to that, one of the banking companies have also announced their third quarter initial business estimates. That's Karur Vysya Bank. Abhishek is here to tell us whether it looks good or bad. Abhishek, Karur Vysya stock has done well. I guess the numbers look good.
Well, one of the lowest NPA in the banking sector, Karur Vysya has the lowest gross NPA ratio, perhaps below HDFC Bank as of Q2 FY25. And they have given a strong business update as well. They have gained market share. At a time when deposits are hard to come by for the sector, their deposit growth in Q3 has been close to 16% YOY and 3.5% on a sequential basis. However, the trend with respect to CASA declining for the entire sector continues with Karur Vysya Bank as well. Their CASA has in absolute value grown by close to 4.3% YOY and has declined by 0.2% sequentially. So the CASA ratio continues to slide down. It is now at 28.4 versus 31.5% on a year-on-year basis comparison and about 29.5% in the previous quarter. Advances growth has remained healthy because the sector itself is seeing slowdown in advances growth. So considering that, the advances growth is healthy at 14% YOY and about 3.2% sequentially. The deposit growth being better, they have lost out on CD ratio. So CD ratio has declined for them to 83.55% versus 84.9% in the same quarter last year and about 83.8% in the previous quarter. So there could be a marginal impact on net interest margin due to the fact that deposits have outpaced the advances growth. Back to you.
Okay, that's very important news. Thank you very much, Abhishek. Especially the credit deposit ratio. In fact, even for the industry, the credit deposit ratio has considerably improved from what it was about 2 quarters ago when RBI was goading all the banks to get after deposit growth, and that led to lower credit growth till they had enough deposit cover. So Mayuresh, on that note, what in the banking sector pleases you?
So we like Karur. So our take is that outside the numbers that Abhishek just spoke about, provisioning is extremely elevated at this juncture. They've got a 96% PCR ratio as we speak. The cost to income ratio is dwindling downwards every passing quarter. And if you probably look at the restructured book, including the net slippages, net NPAs, the SME1 and the SME2 book, that's very well under control and coming down as well if you map the last 8 quarters performance as well. Yes, I completely concur with Abhishek. I think there might be a little bit of pressure because of the CASA slowdown that you've seen on NIMs. But generally, I think the business is well poised to grow expansively in the next few quarters. Their credit underwriting, specifically in terms of commercial and corporate banking, has been top notch. And I think it's been well spread out in terms of the overall risk they are taking in both these segments as well. So I think this remains one of our top picks. ICICI Bank, Lata, within the larger names, the EPS rating, the institution holding is very, very strong on what we map. And therefore, being a very, very strong liability franchise, there can be a steady state growth within the larger banks that ICICI Bank can exhibit. And one of the other names that we're keeping on our watch list is Federal Bank. I think the numbers had been good in the previous quarter. The expectation is, again, asset quality pressure should remain stable and dwindle lower. At the same time, NIMs at around 3.12 should probably consolidate and then probably improve in the next few quarters. The biggest advantage that they've got is the remittances that they probably receive in terms of NRE deposits, which is almost 30% of their overall deposit.
Mayuresh, what have you and your team made of the auto sales numbers for the month of December? What are the key highlights to your mind or trends?
Afternoon, Rima. No, again, so I think autos generally, in terms of OEMs, might go through a consolidated patch in terms of absolute numbers. Our own sense is that M&M probably might stand out within the four-wheeler pack. And obviously, I think the say that they've got in terms of the SUV market share, expectations of more launches coming their way, expectations of the tractor business or the farm equipment business expected to hold up. And on an SOTP basis, the other subsidiaries expected to have a reasonable amount of show. I think M&M probably might stand out for all these factors put together. But generally, I think our own sense is that the next 2 quarters, there might be a little bit of consolidation that might probably happen as far as numbers are concerned. In lieu of competition, pricing might probably also play out in terms of overall growth. And therefore, the combination of all these factors put together makes us believe that Q3, Q4 might be a little bit soft for a large part of the universe. But M&M, in my opinion, within the four-wheeler packs stands out.
Oh. All right, let's move on and talk about Metro Brands, because Motilal Oswal says that this is one of their top picks going into 2025. Upasna's joining in to tell us what is it that Motilal Oswal likes.
Well, that's correct. Motilal Oswal has highlighted Metro Brands as one of its top picks for 2025. It believes that the company has a long runway for growth. Hence, it is given a buy rating on the stock with a target price of 1460 per share. Well, the brokerage says that the stock underperformance has been seen, is what we've seen in calendar year FY24, and the underperformance was mainly due to internal and external factors. It has highlighted internal factors of the company such as liquidation of old FILA inventory, which impacted overall gross margins, and also decline in revenue per square feet driven by a lower share of Crocs in incremental store rollouts. Now, coming to external factors, brokerage says that external factors include overall demand weakness seen in the footwear category, leading to such a underperformance. But it believes these are short-term blips and remains optimistic about the long-term growth outlook for the company. It says that the company has a strong runway for growth and healthy ROIC of 30% plus. Hence, it reiterates a buy rating on the stock with a target price of 1460 per share.
Okay, got that. Thank you very much, Upasna. Mayuresh, very quickly, any consumer discretionary, the Metro variety?
So when it comes to footwear, Lata, I think if you probably map out Metro, Relaxo, and Campus Activewear, Metro Brands has a relatively better margin profile compared to the rest of the pack. Obviously, I think the expectations in terms of the inventory issues that plague the whole industry should probably get sorted out because the timeline have now got extended to a large extent. And therefore, I think the store expansions that are happening in Metro's case shall probably help in the overall earnings growth. But I think Campus might have a good momentum because I think the vertically integrated operations that it has got. And specifically, I think the upper soles and the inner soles and the combination in terms of putting them together is a complete in-house process. And therefore, the SGA market, the sports and athleisure market, which is expected to grow exponentially over the next few years, is a 22,500 crore market expected to grow at a pace of 8 to 10%. And the casual footwear market is 66,000 crores expected to grow at 4 to 5%. So I think the S&A players might just have an upper hand as far as footwear is concerned.
Okay, got that. We have to take a quick break. Mayuresh, do stay on. A bit of a message for our viewers. Good news, I would think. India's business news leader is now only a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from Apple Store or the Google Play Store. Welcome back. Markets still with a decent spot of green and about 0.5% gain no matter which index you pick. And like I've been repeatedly saying, we can't take these gains very seriously when we are trading in isolation of global cues. We're practically trading in a vacuum, and perhaps some reality touch will return same time tomorrow. But nevertheless, banking as a sector didn't do much in 2024. But there were some standout performers. One of them was State Bank of India, which the stock rose 23% despite Nifty Bank growing only 4% last year. So we invited the chairman of State Bank of India, Mr. C.S. Sethi, to discuss the 2025 growth outlook. Let's just listen into some of the key takeaways from that conversation.
So I don't think there will be too much cost escalation on the deposits. Obviously, all the banks are focusing on activating their networks, branch networks, and also redesigning the products and processes. How do we retain and mobilize more deposits? Corporate credit growth essentially is coming from some of the sectors. Obviously, the renewables, roads, some of the petrochemical expansion has also contributed to the credit growth. But I think core sectors, the capital expansion has not been happening, particularly in the steel, cement. I think there's a more of consolidation which has been happening there. Hopefully, one important thing what we noticed is the housing sector is doing well, which means that some of these sectors like steel, cement probably would do better in the current calendar year.
Okay, so those are some thoughts. Mayuresh, we already asked you banking. Let me not throw any more sectors at you. You tell us what would be your top, say, 3 picks or even 5 picks for the first quarter of 25.
So, Lata, I think I covered a few. I think Karoot is something that we continue liking, so I'm not getting into the thesis of that. We're liking Praj Industries as well, because I think it's a complete play in our opinion, not just on making 2G, 3G ethanol plants now, but I think they're completely getting into new fuels. So biomarine fuels is an example, the sustainable aviation fuel is an example, and have actually developed products related to the same. So I think as these products find their way into the domestic and the export markets, a large part of the revenue growth that they have pegged for 2030 might actually get played out. And in my own sense, I think they can deliver those numbers even before 2030. So I think it's a good base case scenario for Praj Industries. Nesco is something that we continue liking at Markets with India. I think excellent EPS rating, strong institutional holding, most parameters that we look at it cancel in. The exhibition business, the IT business, and the food interpreter business are all doing extremely well. And my own sense is that both the exhibition part of the business and the IT part of the business should continue growing. They've just utilized 30% of the available land that they probably got in their premises in Goregaon and Mumbai. So there is huge scope of growth in terms of development that can come through. They've got cash, which is almost 15-16% of the overall market cap. Valuations also not too expensive. Last but not the least, I think Apple India, which I discussed last week on the show as well, is something that we continue liking as a proxy to IT and as a proxy in terms of mobile advertising as well. The CPCU model that Apple has clearly in its favor, with pricing actually improving in the first half of this year compared to the last few years as well. So again, I think balance sheet growth and earnings dynamics should favor Apple as we head into the next few quarters, supporting the historical 40% top line growth, 40% EBITDA growth.
Okay. All right, we'll leave it at that. Mayuresh, always a pleasure having you with us, and here's wishing you once again a brilliant 2025.
Same to you, Lata. Always a pleasure. Thank you.
Thank you. Okay, so the market's ending with a nice bright shade of green, about 0.5% gain, no matter which index you pick. So let me just pick the Nifty for you and give you the top gainers. The automobile sector has just driven away, speeding away with the gains of the day. The top gainer, Maruti, is up 3%, M&M up 2.5%, and Eicher Motors and Tata Motors are also chipping in with a good 1.5% in terms of gains. Their financiers, which is Shriram Finance, and to some extent maybe more minorly, Bajaj Finance, are the other two winners with about 1.3, 1.2% gains. L&T is a big gainer. That's up about nearly 2%. That's the top maybe 7-8 winners in the Nifty space. Those who haven't done well are, well, to some extent, DRL, Dr. Reddy's and pharma stocks have had a very good 25. So you're seeing perhaps some give back. Hindalco, Adani Ports, ONGC, Tata Steel and Bajaj Auto among the only auto stock that has not done well. That's because two-wheelers, not very flattering numbers as far as the December sales were concerned. Reema, you want to tell us mid-caps, any standouts?
Well, the mid-cap index ends with a gain of 0.5%. The small-cap index up nearly 1%. Positive advance decline ratio on the way up. Tanla Platforms, very large volumes, 12% gain. Camlin Fine, board meets tomorrow to consider fundraise. SJVN, order win. Suzlon Energy, Reliance Power. So some of these renewable energy themes were active today. IREDA numbers look good, the disbursement numbers. IRB Infrastructure on the winners list. On the way down, softness seen in Sagility, ITI, which has been a big mover, and Easy Trip to lower by 1%. With that, it's a wrap and closing bell. From the entire team, thank you for watching, but don't go anywhere. Markets Forward is up next.